Hello, everybody, and welcome to the session. Sorry that we are a few minutes late. We had a bit of technical issues. We have a fantastic panel for you this afternoon in Europe and various other times of the day around the rest of the globe. And they are hopefully going to join me on the screen just now. Martina Kresman from World Vision, the director of Savings Group Linkages. Oscar Navas, the vice president of risk from Banca Mia in Colombia. Alia Farhad, the non-financial services manager from Al Mashmour in Lebanon. And Hannington Tenge, the manager of business research and development, as well as the team leader for financial inclusions for refugees from Uganda. Thanks everybody for coming. Thank you to our audience for staying with us throughout this little delay and for joining us. We will be discussing financial inclusion for forcibly displaced people, as well as other foreign-born residents in our market. We decided that we are going to focus on 4 themes throughout this 1-hour discussion, because there is a lot to discuss, but these 4 themes we felt is of interest to a lot of people that we've spoken with over the past couple of years. We'll be discussing perceived and actual risk, segmentation, comparative client performance, and support for expansion of services for foreign-born residents. And I would like us to see our slides on the screen, which are here, and we will get into the discussion. As you can see here, the 4 institutions that are represented in our panel are different in terms of their type, their age, their size, a little bit of their products, and their scale. Al Mashmour is among the pioneers globally in the serving of forcibly displaced people. 18% of their portfolio are foreign-born at the moment. The other 3 of our panelists today are started in 2019, and are growing this portfolio quickly, as you can see. Without further ado, I wanted to get into our discussion of the themes. For our audience, please place any questions that you may have in the comment box or the chat box that you can see. And as you can see here, the emails of our panelists are on the screen. So if you have any particular questions for them later on, feel free to contact them. Our first theme is about perceived and actual risk. When most financial service providers start out thinking about serving foreign-born residents, there are lots of concerns. While everyone recognizes that the new segment is unknown, nearly everybody, including board members, managers, and staff, have opinion about these new segments, even if some of them are based on stereotypes. At risk reigns supreme, but FSPs also worry about refugees' lack of documents, bankability, capacity to manage a loan in particular, and the possible reputational risk to the FSPs. However, these risk assessments tend to change over time as FSPs get more familiar with refugees and other foreign-born residents. I would like to hand over to Oscar from Banca Mia to start discussion about how Banca Mia's risk perceptions of especially the displaced population from Venezuela in Colombia might have changed over time. Oscar?
Hello, Lena. Let me send my regards to the audience, and thank you for your introduction. I think you have done a good description of the typical concerns that all of the institutions that decide or consider the idea to develop a forcible displaced program have faced in this decision. But I think, as you can see your presentation, these concerns are very similar, no matter the geography. Uganda, Colombia, Lebanon, all of us share the same concerns. So I believe that the issue is not the concern by itself, but the capacity or ability of the institution to handle with that. I think is the main issue. In Bancamia, our forcible displays program is a recent initiative. We began at the end of 2019, so our risk perception has not changed drastically. The lack of information for assess the creditworthiness of new potential borrowers, the legality, the bankability are still a concern for us. But that I can say is that we understand it a little bit more now than before. Taking the decision to start the program gave us the possibility to approach to the migrants, to be closer to them and to learn from their needs, from their behaviors. And through this knowledge, we are finding the way to handle with this risk. At the beginning, for example, the most important concern, the most important challenge for our risk team seemed to be the lack of previous credit information for potential borrowers. But we found at the same time that this topic seemed to be, too, one of the main sources of frustration for the migrants, especially for those migrants who in the past in their country had built credit history and reputation with time and with effort. They now have to start again from the ground in a new country, far from home. Really, really frustrating situation. So to solve this challenge, we were in two strategies. The first one, understand and learn. I think it is important to understand. Because of that, we started with a pilot. We decided to go in step by step with the purpose of understand their behaviors, understand where they are, understand how they connect or communicate, understand the level of support they receive from families or relatives or friends, and this understanding have been incorporating in our criteria for assessment, criteria in our assessment process in order to measure the character of the borrower. On the other hand, we have encouraged other institutions to join us. And in this way, I have found an amazing strategic partners for the project. We found one of those partners decided to support the program, providing guarantees to share the credit risk with us. At this moment, our program is at an initial stage and with some delays due to the COVID situation. But we are already disbursing loans, small loans, in average $350 for the size of the loan, that help the Venezuelan migrants to enhance their business. Some others have the possibility to access to saving accounts as the first step to build wealth. And we are proud of to say that 56% of our Venezuelan customers are women. So I think the risk is there, the risk factors is there, and the real challenge is how to handle with that, how to develop the capacity to understand it. This is my opinion, Lynn. Thank you.
Thank you very much, Oscar. Alia, what's your additional experience from a very difficult market of Lebanon these days?
Yeah, thank you, Elena. So I'd like to build upon what Oscar was just saying, and indeed, what we saw that over time the risk changed, and I think it's also about our perception of the risks that changed, and the way when we started to work with foreign-born residents, could it be with our Palestinian refugees, then with the Syrian refugees, or with other communities such as the Filipina, for example, community. When we started to get to know them and closely build a relationship with them, we were able to have a different risk perception, and this was conducive to have a high increase of our clients, foreign-born resident clients in our portfolio.
Martina, how does it look from the perspective of Vision Fund, who started out in Uganda with refugees?
Yes, that is correct. Also, I just can add what my colleague said before, our risk perception really changed as we got to know our client. And I think it moved very much from, perception of the risky client, and you focus on, foreign born, what does that mean, legal context? And it really shifted to the implementation and to questions around, the product and, network challenges. And how do you set up the product? How are you sustainable with a branch or with an agent network? So these are all questions that you always have in the microfinance world with the product. So really, it was for us a good journey over the last year to see it move from focusing on from the risky person, really on the day-to-day. No, this is a product, and we're going to make it work.
Hannington, does that reflect also in the portfolio of Yugafod?
Absolutely, like Martina and Oscar have mentioned, at Yugafod, the risk portfolios are generally almost the same, and we continue learning as we progress through all this. For example, when you look at the urban versus the rural, the risk parameters can change. We find the urban to be very mobile versus the rural who are in the settlements. Remember, in Uganda, there are different settlements where they have been given land, so you are sure you go at any one time and you find them in their allocated space. You'll find them farming, practicing the agriculture, versus the rural who will be in mobile markets, who will be moving from one neighborhood to another. So you figure out all this, and that's why the KYC is very important. For as long as they're identifiable, this is important for refugees who have a refugee ID versus asylum seekers, possibly who are not yet using identifiable, acceptable KYC. So the learning process continues as we figure out all the things to answer into the risks. Thank you.
Thank you very much. I want to proceed to a second topic of segmentation, or rather perhaps the revival of the skills of segmentation, which for national portfolios isn't always as sharp in the past decade as they used to be. Because FSPs are initially unfamiliar with the foreign-born residents and feel unable to apply some of the usual local knowledge of stability, known families, character of the residents of a certain area and the like, segmentation based on new criteria sometimes becomes important. Often, these criteria are strict in the beginning, but they evolve all the time around legal residency and economic capacity. As FSPs become more familiar with the new segments, any new indicators seem to be refined, but also gets incorporated into a more sort of standardized appraisal process. Alia, has that been your experience also in Lebanon? Or how did you learn to segment and find the best match for your FSP?
Yes, definitely, Len, and thank you for the transition. So I think that amongst the things we wanted to look at from the beginning, the main question was whether to have a specific product for the foreign-born resident or to keep our own existing product. And at management level, the decision was made after having, consultations with the field, with the operation, with some of our Lebanese clients and so on, that it would be best to actually include the refugees' existing products and services on equal terms, meaning they could access similar services, but then the differentiation could occur at the level of the eligibility criteria for new foreign-born borrowers. And considering the different risks that were presented in the previous slides, so we basically developed our appraisal criteria in a way to mitigate the risks we had identified. So if, for example, you're looking at the table right now, so to answer the mobility risk, we were, and a lot of us actually looked at similar things, such as the duration in country, whether there is an operating business or not. For example, this idea of having a cell phone number for the past 12 months or having the children enroll in school would be factors that could mitigate our perception of the risk. To answer some of the legality issues, we all looked at, at minima to have a legal residency document at hand. And over time, indeed, what we saw is that along with these changes in risk perception, the criteria, the eligibility criteria were also refined. So, for example, in Al Majmoua, we started over time to look a bit more at vulnerability risks and to look at the over-indebtedness of our foreign-born clients. So it changed. It changed through time. And as you mentioned, what we could distinguish is basically between the basic criteria that are essential, so our standard appraisal criteria, the legal residency, the purpose of the loan, but then over time also other things that would be refined. And the idea is that each organization probably will have a different approach to identifying the risk and how to mitigate those. But what we've seen in discussing amongst the different MFIs that are present in this panel is that we had very similar history in approaching the risk. Thank you.
Thanks very much, Alia. I totally agree, and I think this slide also demonstrates that. Hennington, do you have anything to add specifically to the indicators that you applied?
Yes, I can add that with segmentation one, it has been kind of easy to segment them. Because of their different origins. For example, when we say Congolese or Burundians, irrespective of whether they're Southern Sudanese, it's so easy, one, to know that they have their local or segment ways of identifying themselves. They have very solid cultures from where they come from, and they have very strong networks within themselves. So following that corridor or value chain of business, it's very easy to get comfortable with the languages. And with that, it enables us, for example, to get a refugee employee who can speak that language. Hence, we are very comfortable to communicate. Once we understand the language barriers, then other things fit in. I mentioned KYC. Then what is key, again, is how are we going to communicate because of the distances involved. So if a cell phone can be connected to an individual in their name, I get very comfortable. I can easily know that I can track, I can segment, and I can identify this person in that respective community or tribe or or settlement where they come from. So it helps the business. It helps the criteria of evaluating them, and this has been very, very helpful to grow our portfolio. Thank you.
Oscar, how does it look from the perspective of your Venezuelan portfolio? Did you add any specifics to segment them?
Yes, the same case of my colleagues, we have found new variables relevant for the assessments. First of all, let me say that Bancamia, the institution that as which part of the microfinance BBVA Foundation, we are focused on on this type of clients who has run small enterprises. Just this is our target. So we focus on the variables, especially of the enterprise, and we found a strong variable, strong source of information, that is the reference provided for the customers of our client, for the neighbors, for even some of their suppliers. This information led us to contrast the information provided for the customers when they apply for a credit, for example, for loan, with the truth of the situation of the customer. Another topic I've learned is the journey, is related with the journey with the customer. Not all the customers want or desire credit at the beginning. Some of them prefer to start with saving accounts, and after that, when they have accumulate some amount, they decide to jump to the credit appliance.
Thanks very much, Oscar. Now, Vision Fund focuses on a group model and uses the established VSLAs in Uganda as a basis for lending to refugees. Have you had to add indicators for your segmentation in that respect, Martina?
Yes, we have, exactly, Lena. We have approached the refugee space first on the group lending principle, then having noticed, it really is the same for the host community. So it was really then, as I said before, the shifting from the refugees portfolio specifically to address the product in a more, rural, economically active client segment. So we added definitely criteria specifically for that group. We mentioned the problem of past credit history, for example. So we decided to move away from that and look at, okay, what do we have now? What does that group look like? So we have now indicators around group strength. So let's say the retention rate of the group, from one year to the other, whether they're keeping the records. So we're actually looking at the records, something completely new that the staff had to be retrained. We didn't do before. Group procedures, is it a strong group? They have a constitution. They're following their own constitution. Do they save regularly? Those village savings and credit associations regularly save, regularly meet. So those are all things that you can look at to see whether it's a strong group or not. And that in the end decides whether you borrow to them or not.
Absolutely. That's where we all end up. Thank you so much. We are going to proceed to the third theme that everybody is asking about all the time. How do forcibly displaced or other foreign-born residents perform as clients, specifically as borrowers, over time and compared to the nationals that most FSPs think or feel they know better? With all the risks and the concerns of most FSPs that are considering to expand services to foreign-born residents, the information on the actual performance is really important. Obviously, we can't talk about performance without also addressing the impact of COVID-19, as has been clear throughout this whole conference. It's also evident, as you can see in the growth paths on this graph, that the overall outreach to FDPs, and here we are measuring or we are demonstrating FDP clients or foreign-born clients, so not only the borrowers for the FSPs that serve both savings and borrowers. And as you can see, Al-Mashmour started way back in 2000, whereas the other three started at the beginning or into 2019, but have already grown to a level of 2,500 to 4,000 clients by October 2020. Now, we've compiled a selection of lessons learned from these 4 FSPs, both in terms of performance comparative to nationals in general, or up to March of this year, before COVID, and during the past 6 months of COVID. And I wanted to start with you, Martina, to ask, what has Vision Fund learned about the performance of refugee clients vis-a-vis nationals before and during COVID?
Yes, thank you for that. Yes, the overarching presence of COVID. So the lockdown restrictions in Uganda were especially tight between March until June, July. And it hit the population because, for example, in trade, only food items were allowed. So all the trade with non-food items, stopped, which meant markets disappeared. Public transport was forbidden, so there was no more movement to other markets, and especially hard for us because, remember, I mentioned the group product, right? Is the meeting restrictions of people up to 5 alone, and our product was based on meeting of 30 people. So obviously that didn't work anymore. So jumping into COVID now, we were really concerned when the restrictions started that the whole refugee portfolio would just go away because this will not work. The income was gone, meeting restrictions were up. So what we did really quickly when it started was to get client feedback to see how they're handling COVID and what's happening on the ground. So we interviewed 417 people. On a side note, we could only do that because we had local staff hired from the community. Otherwise, it would not have been possible to interview those people, in the settlement and host community if we wouldn't have staff living there and with the digital means of doing that. So big plus on that side. So what we found during COVID is that from those groups, 81% of the refugee groups continued to meet, where in some shape or original form, either in smaller groups, the chairman walking around, meeting less people, and breaking up in smaller groups, but continuing to meet, meaning also continuing to save. And versus that, 45% of the host community continued to meet. So there was a bigger drop on not meeting anymore and also, not saving anymore. So with that comes obviously for us, it's a credit product, the repayment. Before COVID, I'm really happy to say that the portfolio of the product for both host and refugee was at a perfect repayment rate. So in our lingo, that's 0% par, meaning perfect repayment rate before COVID. And you clearly see them in Uganda, March. This is where it starts. So then, obviously, repayment rates were really badly hit. Although when we compare the group loan product of refugees, continued to have a repayment between 70 to 80% throughout COVID, whereas other products of the rest of the nationals completely decreased, and the repayment rates were as low as 20 to 30%. So through COVID, we saw an incredible resilience, of refugee and host, and I would say also of this group product, because it was the product that stayed up there. Now after COVID,
oh, sorry. I'm going to move and let the others just add in, Martina, here. Oscar, from your experience, how have your Venezuelan clients performed?
Well, in general, we have observed a high level of loyalty and a strong commitment with the payments. In some cases, showing better performance than some local customers. The migrants clients tend to be more responsible with their credit facilities. Probably they take care of them, maybe because the credit sources for them are limited in general in the market. Along the COVID period, the quality of the global portfolio has reduced in overall for the locals and foreigners. But the FDPs have access to the general refinancing program that the Bancamia put in place in order to support their debtors. In this case, we can observe the commitment of the Venezuelan customers with their loans. However, the pandemic situation has shown three additional facts. First, the FDP's incomes are more vulnerable than the locals are due to their lower life conditions. Second, we found that the migrants have suffered the shock in the income, so it means a lower capacity to repay or to access to new loans and to remain the saving discipline. And this situation reduced the demand of financial services during this period. And finally, I can say that the hard condition of the migrants, some of them have forced to come to Venezuela temporarily, waiting for better conditions to return to Colombia. And this means an interruption of the time in the country. And we have already referred to this variable like important information in the assets in the assessment for access. I think this is the big issue in this situation.
Mm. Yes, I think that's something we see in several markets, and this increased mobility when there is no more opportunity is certainly something we see everywhere else as well. Henningsen, you have seen some interesting differences in performance also between your urban and rural portfolio. Tell us about that.
Absolutely. From the Yuga Food perspective, three major things to take note of. One, looking at the urban, we've seen more savings flight from their accounts, as in withdrawing their funds, versus the rural, where we've actually seen more savings crop up. And this brings in another scenario that the urban seem to have been affected more than the rural. And there are so many things that can explain this. Of course, we are lucky in Uganda that during the COVID breakout, we saw more agriculture output come through, better harvest, we had rainfall. So the impact for the rural was that they would be able to organize their food basket versus the urban who needed the handouts. And that brings in another perspective that we've seen the rural portfolio performing. I'm so happy to know that we opened up a new branch as we're entering into COVID, but we still have portfolio at risk being 0, 10 months down the road, versus the urban who have really struggled. And we know that actually the urban have now started getting some humanitarian support in order to survive post-COVID. So the impact is really there when you look down into all how this is coming out. So, and it's very important to appreciate the segmentation, how all these segments react very differently so that we can know how to support them post-COVID. Thank you.
Thanks. And Alia, in poor Lebanon, that's been compounded by several different crises, including COVID-19, how has the performance of your foreign-born clients gone over this time?
Yeah, so previous COVID and all the crises that we're facing, the quality of the portfolio of our FDPs was very good. Comparable to the Lebanese population. After COVID, plus the financial crisis, plus the political crisis, I mean, all those compounded crises that you're talking about, what we realized is that all of our clients have been affected, and we've seen an increase in the portfolio at risk across the board. Now, we think also that nationality is not the proper indicator probably to assess client performance from our FDPs. We think that it's more relevant to look at their level of vulnerability, because what we've seen across the board is that depending on their nationality, they would be hardly affected if they are already very vulnerable at the beginning. So indeed, what we saw amongst specifically our Syrian clients who were already very vulnerable is that they've been hardly hit by those multiple crises, and it resulted in an increase of the portfolio at risk. But that is very understandable. And again, I mean, for the case of Lebanon, it has been something that has happened across the board to all of our clients. And what I just wanted to highlight also, because on the previous chart, there was this graph where we can see that by the end of 2019, Al Majmoua had around 17,000 active clients, FDPs, and today we are barely, at 7,000. So it means that in less than a year, we lost 10,000 clients, FDP clients. But again, this is also coherent when we're looking at the overall portfolio of Al Majmoua, that went from 90,000 active clients to around 50,000 clients in less than a year time.
It's been a tough year for everybody, and especially perhaps for Lebanon. I want to switch to our fourth theme, which sort of looks a little bit ahead. Much has been said at this conference already this week about the impact of COVID on FSPs. And in terms of FSPs that are serving foreign-born residents and forcibly displaced people in particular, the type of support also seems to change over time a little bit. So many start out asking for credit guarantees or risk-sharing arrangements because the perceived flight risk is so high. But guarantees are expensive, and several of the FSPs that we track across the world cancel them when they begin to see this general good performance of the foreign-born portfolio. Hennington, I wanted to start with you in terms of Yugafode's experience and how you see the most important assistance for Yugafode going ahead in order to increase further your foreign-born portfolio.
Thank you so much, Lynn. It's very clear that Yugafode has quickly gone through the proof of concept, and I would happily say very successfully, with over 3,000 foreign-born portfolio of over 3,000. We are happy to feel that I think we've learned, and this can start scaling. That is very key for everybody to appreciate, that the foreign-based residents are bankable. Refugees can have a very big portfolio for NFSP that wishes to enter into this space. And that's why I think that getting support in terms of capital expenditure in order for us to go to the many settlements that are out there and need our services would be very important. And again, there's what we call a refugee readiness mindset. We need a lot of exposure. We need a lot of support to ensure that the staff who are handling foreign-based residents appreciate them. They know the traumatic issue that they have gone through, so that there is a welcoming environment. And of course, this helps quickly to appreciate that we must communicate in their languages and any support to enable. And this is the kind of an educational front to continue empowering staff to communicate comfortably. This helps the foreign-based residents to trust the FSP that they are dealing with. It makes them feel that they're welcome. The materials that we are using all across should be translated in order to address the different segmentation of the foreign-based residents that we are serving, because this is another way of making them feel comfortable. And again, looking into product development, imagine all our products, we have to do some kind of either refinement or enabling them to be appreciated by these foreign-based residents, because from wherever they were coming from, possibly they were refugees, there were products that they were consuming out there before they crossed borders. And this also answers into, for example, Islamic banking. This is not an area we are very comfortable at all with, for example, in Uganda, but we have a number of segments that come from kind of Islamic based countries, and they would want this kind of services. We are not yet ready there, but the demand is there, and we think we should figure it out. And then digging further, we need more research to appreciate this, the information in these segments. What do they need? We can't continue assuming. You know very well that research shows that foreign-based residents can consume the same products that nationals are consuming. But this is not human-centered design. This should be changing. Possibly we can do much better. I can go on and on, but I really think grant funding is something that we can't take for granted at all. We still need it in order to address into non-financial services. And this is a case for UGAFORD. This is not our specialty. So we need partners who can help us go further into this. Financial literacy is very key in order for us to comfortably continue expanding, to continue branding very well, and then above it all, we have to continue thinking of business development. It's a huge market, and definitely we can't assume at all that everybody is going to remain the same. So all support is still very welcome in order for us to figure out how we can make this better, because definitely the market is there and it's beyond proof of concept. Thank you so much, Lynn.
Thanks, Henningsen. Oscar, as a bank with a pilot, are you still considering the need for a credit guarantee as the most important support, or has your need for external assistance changed?
Well, Lynn, I think there are a change. Along the project, the development, we have built alliance with other institutions, such as USA, the United States government, the IFC. In addition, we joined to 10 partnerships for refugees and other local institutions. This alliance has been important to make visible the results of the programs, to support the design of the products, and to share the risks through guarantees instruments. And it's important, but I have found another fields that need technical assistance too. For example, let me explain that Colombia is considered as a friendly country for migrants. For their upper position to host them, and demonstrated by the number of permits of work or permit of permanency of the state, the residency, that the government have issued in the recent years. And furthermore, Colombia has a regulatory framework to promote the financial inclusion. Despite of that, the results in the financial inclusion for FDPs are still poor. According with some surveys running for 10 partnerships, just 15% of Venezuelans in Colombia have a saving accounts, in contrast with the locals that stand at 80%. So we found that one of the reasons of these low figures is the high number of migrants that doesn't have legal status of residence. This is a huge barrier if we consider that 42% of the migrants in Colombia are in irregular status of residency. So I think there are enough room enough for technical assistance, because even though the government have been doing efforts to improve the identification and regularization of this person, a company and advisory for the migrant are required to help them to understand the process. Unfortunately, the lower level of regularization is produced in part by lack of knowledge on the procedures to do that. So beyond the guarantees, beyond the technical assistance for the institution, I think there are some fields that need support and technical assistance to to make easy the financial inclusion process. Thank you.
Thanks very much, Oscar. Now, Martina, with Vision Fund's group-based model and implemented for refugees in a very remote area, what are you seeing as the core needs for Vision Fund going forward and growing this portfolio?
Yeah, it's been interesting in exactly what you said, Lena. I think we're the ones moving away now from the credit guarantee. Actually, we want to restructure that and move it somewhere else. What we're seeing now, where we are now, I think the model and starting, as you mentioned, in rural areas, distances are really, is really far. And highlighting what Hamilton said, it's actually internally, the staff capacity, staff training, the training materials, the translation. That is what's needed for the client service. You want to go mobile. We have mobile money. You need a network. So the mobile money integration or digitalization of the group. There's a whole software, hardware, smartphones, motorbikes, a heavy capital expenditure at the beginning to invest to even reach those areas that are still there and for which we are very grateful for the support externally just for the pure setup. And then, as you correctly said, it's less on the credit guarantee, right? It's less of the portfolio as such because we now, again, as Seneca said, we've proven the concept. The portfolio at risk is really good even after COVID. We're getting there. So it's now also, the partnerships, the financial literacy training for the clients, business training. We get continuously asked by clients, give us more. Not only the loan management, not only the financial services, give us business trainings, budgeting. There's so much more need on the training front, where again, partnering with other organizations such as NGOs are really needed. And then, impacts. We are the research organization. We would like to see more of those maybe research organizations invite you in to have data collection, improve the data collection, and really see those stories out there. So there's really still a lot to do on that front to dig deeper. Thank you.
Sure. And Alia, from the perspective of Lebanon, obviously there is some lost ground to be recovered eventually, and it's going to be a long slog back up, I'm sure. But when you look ahead, what type of support to grow the foreign-born portfolio back again do you see?
Yeah, looking forward, I think it's about rebuilding their livelihoods. It's about supporting them to kick off again and being able to consider a loan as a viable option for them. And I think another thing I would like to focus on is that regardless of what happened, if COVID would not have happened and the crisis in Lebanon would not have happened, I think that what we would have seen as a trend is actually going further into developing other type of services, financial or non-financial services for our FTPs. Previous to the COVID, we were working on a program that would basically link our Filipino segment of clients directly with banks in the Philippines in working on creating some pathways for remittances, in exchanging information about their credit history, so that when they're back in the Philippines, they could actually leverage this type of information. And unfortunately, all of those plans were put aside for the time being, but we're looking forward to bringing them back on the table, because what we've seen also is that the longer our FDPs spent in the country, and the more we get to know them, the more we realize that they also need other regular financial services such as savings and microinsurance and others. So yeah, we're looking forward at having better times so we can cup up and go back to business as usual.
Absolutely. I think we're all looking forward to that. I would like to wrap up this session with a sort of your best advice to other FSPs that are starting out on the journey of expanding their services to foreign-born residents in their markets. What have you learned? What is your best advice? Let's start with Martina.
Thank you, Lena. I think nothing very revolutionary, but it has helped us a lot, was do your market assessment and try to get to know your client. Ideally, have that local staff analyzing the clients that you want to work with, because it gives you the whole knowledge that you need to start with. Local staff really helped us a lot. Again, language barrier, cultural barrier worked really well. Use of technology, so some of the improvements on the product process can go a long way. Mobile money, digitization, all is really important for the process. And then do not underestimate the need for training, and that includes staff as well as clients. I think will be very for us.
I think that resonates with a lot of people. Oscar, what would you say to other banks starting out on this journey?
Well, I can say that FDPs have to face several barriers to be incorporated into the receptor countries. I mean social and economic inclusion, especially if the host country has a reduced capacity to respond for the migration phenomenon. In this case, the migration may worse the country situation, deepen the poverty conditions. So I think IMS has have to be an important role providing financial services, and we should move us to take action. But keeping in mind that this is not possible with isolate efforts. It requires working with governments, working with regulators, with private and public sector, in order to create an ecosystem to promote the financial inclusion. So my advice is try to make this connection with other institutions, try to build alliance, and take action. I think it's necessary to move in the first step. I believe in Bankability and the Microfinance Foundation (BBVA). We strongly believe that provide or create opportunities for FDPs, no matter their condition. It's named refugees, migrants, immigrants, no matter. It's equivalent to provide pride. It's equivalent to provide confidence, but at the same time, improve the life condition not only of the migrants, even the community that receive them. So my advice is take the decision and go step by step.
And Alia, from a market where working with government may not be the most easy proposition, what would you advise other FSPs to do?
Yeah, what comes to my mind is really, get to know the FDPs, communicate internally, get the buy-in of your board, of your staff, explain how it relates to our social mission. And then it's just about not being afraid to engage with the FDPs. It has been a long journey for us, and what we've learned is that definitely it's worth investing and supporting them, regardless of also the constraints that you may face. In Lebanon, we faced a lot of pushback and constraints from the government, but then we were able to find a way. And again, it's part of our mission to serve them.
Absolutely. And Hennington, you get the last word. What would be your best advice to other FSPs?
Wow, I can say that from our learning, it's very clear that it's beyond proof of concept. It works. If foreign forcibly displaced persons can be banked, They can be welcomed if we build an environment for them. This is a new frontier which we should have entered way back in time. We've lost time. That's what I can emphasize. And this builds in to appreciate that they can definitely strategically build onto any portfolio of a financial institution in terms of clients, in terms of savings, and to achieve all this, it's up to FSPs to build a refugee-ready environment. And this is a big discussion from the staff, from the way we communicate, from the language, from the displays, and how we treat them to be human. They are here they're here and developing economies. They're here serving us in very many ways. Therefore, this new frontier should be served. You're all welcome, and we can always continue sharing experiences. Thank you.
I thank you very much, Hennington, and I'd like to thank all of our panelists. We started 5 minutes late, and we are now back on track of time. I have looked in the chat box, and I don't see any questions from our audience. And we also don't want to take up time for the next sessions of the Microfinance Week. But thank you all 4 of you for your insights. Thankfully, this session will be available for other people to also see later on and hopefully learn from all of your experience. And thanks for everybody in the audience to listen. And we hope that many more foreign-born residents in many more markets will be served going forward. Thank you very much.
Thank you.
Thank you.
Bye.
Thank you. Bye.
And so now it's time for some networking. So please go ahead and click away, find people that you want to chat with, and visit exhibitions stands. Right after the networking, there will be 2 parallel sessions, which I will tell you more about right after this next half hour of networking. Enjoy.